Hey everyone, Couch Investor back to another video for today. So Airbnb on Tuesday jumped close to 8%. Why is that? Well, it was reported that Blackstone and Airbnb are set to join the S&P 500. That will happen, I think, on the 18th of September. Now, of course, nothing fundamentally changes for the business, but for the stock itself, being included in the S&P 500 does have some positive effects. For example, many passive investor funds track the S&P 500, so automatically they'll have to add shares of Airbnb. Then, of course, when you're added to the S&P 500, your reputation goes up a bit more trustworthy. Again, it's just about optics, nothing more than that. And then lastly, since you are in the S&P 500, maybe more analysts might cover this company as well, which means we might get more upgrades or downgrades, more comments from analysts from now on. Now, Airbnb right now has a market cap of $84.67 billion, forward PE of 31.2 times. Year to date, it's up 66%, so it has done quite well. But if you actually look at the stock's performance since it went public, and if you look at the headlines, right, everybody's saying Airbnb is still expensive. We've had also some bearish reports on Airbnb. Demand is coming down. A lot of people can just rent out their own places without going to Airbnb. Cleaning fees are extremely high, etc., etc. So you might think that this company is maybe extremely overvalued, not doing well, and so on and so forth. But as you can clearly see here, compared to its mean, if you look at PE the next 12 months, EV to EBITDA, price to sales, price to free cash flow, currently we are, for all of them, under the mean in the last 3 years. So to me, you might say, right now, it is cheap-ish. Of course, Airbnb has just been public for 2 years or so. So the mean here, unlike many other companies where we can look at the last 10 or 20 years, only gives us 3 years to work with. But still, it's nice to see that currently we could see that the business is doing much better, growing faster, and the stock is following that trend. Even though it's up 66% year to date, right now, if you look at all the valuation metrics here, I think we're quite in a good spot. Now, I know some of you will already ask me, so I'm comparing this right now to Booking Holdings. And yes, Booking, if you look at all these metrics, is cheaper than a company like Airbnb. Now, if you're enjoying this type of videos so far, leave it a thumbs up, subscribe if you have not, would really appreciate that. We're well on our way to reach 30,000 subscribers, so thank you very much for all the support. Now, for those of you that missed it, let me remind you how the last quarter actually looked. So when you look at active listings, that increased 19% year over year. Nights and experience booked reached 115.1 million. That's up 11% year over year and 37% year over 4 years. Gross booking value $19.1 billion. That's up 13% year over year and 94% year over 4 years. Revenue reached $2.5 billion, that's up 18% year over year or 105% year over 4 years. Net income $650 million, adjusted EBITDA $819 million, then free cash flow $900 million, that's up 13% year over year and 644% year over 4 years. Now, since they generate an enormous amount of free cash flow, they have been buying their shares back. So in May, they announced a new share repurchase authorization of up to $2.5 billion. And during Q2, they already purchased $500 million worth of their shares. In my opinion, I think we're going to see share buybacks happen a lot with this company. Now, with regards to outlook, for Q3, they expect to deliver revenue of $3.3 to $3.4 billion. Of course, the summer months boosting those numbers a little bit. This represents a year-over-year growth of between 14 and 18%. Now, they say here they expect a modest sequential increase in the year-over-year growth rate of nights and experience booked from Q2 2023 to Q3. And then, while our new host pricing tools have had moderating effect on ADR, average daily rates, in the quarter, we expect upward pressure on ADR from FX rate and listing type mix shift to outweigh their impact and drive a year-over-year increase in ADR in Q3 2023. Now, I don't know if you remember, but I think at the start of the year, there was some concern with regards to supply. Well, they ended Q2 with over 7 million total active listings, their highest number yet. They've seen growth in supply across all market types in Q2 compared to the same quarter 1 year ago, including both non-urban and urban supply. Again, one of those critiques that get answered with a positive note. Then lastly here, with regards to the technical side of things, so of course with that news of the S&P 500 inclusion, we've had a gap up here. So keep an eye on that. Not all gaps get filled, but most of them do. With regards to RSI, still neutral-ish. MACD has turned a little bit bullish right now, but say we still have a couple of days left this week. Overall, I mean, the trend here has been on the way up since the lows back at the end of 2022 when the stock was around $83 or so. So to me, it's pretty simple. Airbnb, incredible business, well-run business, great CEO, great management team. I mean, they're following a good trend as well, so that's helping them for sure. Yes, I know some might say Airbnbs are becoming extremely expensive. That's why they're added rooms. Now, rooms will have some negative impact on the business itself because, well, it brings down the average daily rate since you're just taking a room and not a whole apartment or half an apartment, stuff like that. But overall, very, very good business. I mean, free cash flow here is pretty incredible. If the stock goes down, that will mean that the company can buy even more shares, which means that it will increase the shareholder value for the long term. So that will be it for this video. Good news for the company. Nothing fundamentally changes for the business, but for the stock, this is very, very positive. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.